Morning, Chris. How are you doing?
Good morning, Brian. I'm great. How are you?
Excellent. I'm Brian Jones. I'm here with Chris Hood, professional trader, world's most interesting man.
Yeah,
Yeah. So what's going on this morning?
well, my knee is better. I
That's
now can
good.
move around, and I'm venturing back onto the mat very slowly. So it's been good. The last couple of days, the mobility is back in my knee. Coupled that with a couple good day trading sessions, and life is great. Life
Excellent.
is good.
How are the how's the COVID thing going on in Canada? What's up? Are they
We're,
locking you
we're
guys down at
good.
all?
Yeah, no, we're good. I think that the problem now is we've got a lot of the people that are anti-vaxxers that are getting sick.
Mhm.
So I think it's about like 70% of the cases that are coming out now are with people that have no vaccines.
Mhm.
Um, I don't know. I tend to think that they've now politicized this to the point where the government here wants an election at the same time. And the platforms are, one group is saying it's mandatory and the other group says it's not. So, when you've got 50% or more of the population already vaccinated, the party that's saying it's mandatory is generally going to rely on those votes. And the guy that doesn't think it should be mandatory is going to not get those votes. So I don't know. I have no faith in any of the political parties up here whatsoever. I think that everyone should be fired, courted and strung up at some point. I don't know. At the end of the day, everyone makes their own choices as to what they stick in their body and why they put it in there. The only reason I took a vaccine is so I can get back on the mat. I just, if you want any sense of normal life, what are you going to do? You can resist as much as you want, but eventually they'll just say, well, you can't go to the shops, or something
Right.
stupid
It's
like
like you don't have to do it, but you can't fly, go to the shops. You
that.
can't
Yeah,
you can't
I
go
don't
out
want that.
here. Yeah.
I don't want that. And I think some of the, when you consider some of the misinformation that goes out, I find it bizarre that you have all these anti-vaxxers watching a 5-minute show on YouTube, by some rogue doctor somewhere in the world who happens to be I think it was like a veterinarian or something that was talking about how he's not going to take the vaccine because he's a vet and he knows more than anyone else, and then he died or something. It was crazy. um I don't know. Everyone's
Only a lot
entitled.
of lot of different opinions out there right
Oh
now.
yeah, it's no different from trading. It's like, you go on Facebook at any time, and if you've clicked on any ad, and then you see the stream come in, it's like everyone's better than the guy before. I mean, it's just ridiculous. The problem that comes with trading is that, unfortunately, with retail traders or novice traders, they always search for the holy grail. That's the problem that everyone has, is that they're looking for the next best indicator or the next best strategy. And for some reason, someone with a 10 grand account has, visions of grandeur where he's going to sort of think he's going to come out like Paul Tudor Jones and be a billionaire in a few months. It doesn't work like that. And a lot of that sort of appeal, that sort of, how do you call it, deprivation mentality. It's like, I don't have and I want that, so that clearly must be the signal. A lot of people get suckered into it. I can't remember the name of the guy, but there was some dude on YouTube peddling his wares, and he landed up going to jail for some, peddling some garbage. I just, I always caution people, be careful of what you buy into. A lot of stuff in trading is not, a trade is a trade. Everything in trading is easy up to the point where you have to push a key. That's it. And most of the times, people aren't going to be there to help you push the key. So if you don't know how to control yourself when you push the key, no matter how good the trade is, you'll mess it up. Like that's the way it is. It's like,
Right.
I know from our business here, I'll send a trade to my clients and I'll have 40% of them get it horribly wrong and 60% get it right. And at the end of the day, they all had the same information. It doesn't come down to the trade being wrong. It comes down to the individual who, pushed the keys, messing it up. And a lot of times it's a mental thing. This is a mental game more than anything else. So if you're not mentally ready, if you're not emotionally controlled, this thing will spit you up and eat you up and send you packing pretty quickly. So I don't know. I think in a world of many opinions, you've just got to learn to keep yourself completely agnostic and just stay out of it. I don't get involved in any internet arguments with people who appear to think they know it all. At the end of the day, I think you land up relying on what works for you. And this is what I try and encourage my clients to do. It's not necessarily just copy me, trade for trade, word for word, breath for breath kind of stuff. It's like, this is what works for me and my emotional state and what I do. It doesn't mean it's the only thing. It really doesn't. I mean, I'm the first person to sort of look at other people's methodologies and see whether I can incorporate them into mine. Anyone who becomes dogmatic to the point of saying nothing else works, this is the only thing that works. Think about those martial arts masters back in the 70s. It was like,
oh yeah,
my flowering lotus kung fu will beat your drunken baboon kung fu or something. And then they would fight to the death, and I don't think fighting to the death to justify your trading strategy is a good idea, because death means poverty. So, rather than exposing yourself to a poverty situation, it's best to sort of just, learn what is useful from people, but be careful of what you buy into where it's oversold.
It's important to stay out of poverty and solvent.
Yeah, I think that's a good idea. Try and keep the roof over your head. I mean, a lot of these internet, Facebook ads that I've seen and all of that, okay, what the guy's doing is pretty basic. It's not that sophisticated. Where the difficulty lies with a lot of trading systems as such is that they're not systems. It's purely just trade alerts. If you want to trade off trade alerts, you'll end up becoming glued to your screen. You've got to be always next to your PC, because your trade alert comes in and you've got to act, right? The problem is that when you have that, you're not learning anything, right? You're not learning to become an efficient trader. What you're doing is becoming a crack junkie to trade alerts, and you become a sort of, addicted to the dopamine rush of receiving an alert from a service that might have given you one or two good trades in the past. What you've got to be careful about, or what you should be looking at, is what is the rationale for the trade? And if you can understand that rationale for the trade and build a system around it, like a screen system that says, look, I trade the following setup, and I know from my own data that setup is 80% profitable whenever I trade under those conditions. That's far more powerful than getting an alert and acting on the alert. Because once you've got the setup, you can screen the alert and you can say, does it meet my rules? Does it meet the system by which I know I will win, or I have a high probability of winning? Yes. Okay, do the trade. Then you've got actually a process in place. But most people don't do that because it's hard work. Everyone's looking for a 5-minute hack, and this is the thing that shocks a lot of people, is when they suddenly realize that trading, I call it the best vocation in the world. There's no other job that allows me to sit in t-shirts and shorts. I can decide whether I want to work or not. I have no boss. I don't have any of those sort of common man issues, right? I determine how much money I'm going to make, and I go out and I do it. When you've got a process by which you can apply thinking, logic, rules, etc., it becomes so much easier, right? And that's the sort of evolution of a trader, is they start off by copying someone, and then they go, you know what, I don't really like that. It doesn't work for me. I did that back in the old days. I did that. I would get an alert from a service or whatever. I would trade it, and then it would lose me money. And then I'd go, but why did I lose? And then I had no way of actually going back and understanding why it didn't work. It would just be, oh, well, I lost. So I didn't get better as a trader. I lost money. And then, you move on and you repeat the same mistake over and over again. So, understanding that piece and getting to a point where you can track that data and understand win rates and setups, really, really critical, really critical. Look at me. It's not even 9:30 and I'm already ranting. Oh my gosh. I need to get more coffee into this body of mine.
So what do you see the market going? Like, it looks like it's
crazy.
rallying high.
Oh yeah, it's crazy, man. The Fed, they're having their little shindig later on this week, and everyone sort of, I wonder if the Fed is going to probably tone down the message of tapering. Once they mentioned it a couple of weeks ago, you saw what happened. The market had these 3 or 4 days in a row where it was just really painful. And I think they'll have to. I think that you've got a lot of risks at the moment around, the Delta variant, potential shutdowns again. I mean, in some countries that will happen.
But no, in Australia, they've already completely locked everything down again.
Oh yeah, I've got friends in Australia, and it's like, if you go there and sneeze once, you're in. I think 4 people sneezed in Sydney, and they locked the whole city down for 2 months. It's a little bit draconian, but then again, it's like, I don't want to sound like COVID doesn't exist. Of course it does. I think that you've got to be, the government officials in certain places are really doing this politically as opposed to medically. But that's
right.
I have no opinion on it. I have my shots. I don't really care. Get your shot. Don't be an ass. Get vaccinated. That's the thing. So in the market, I think that there are a lot of potentials for black swans. We're at a time of the year where September is historically a really bad time of the year. Okay, so you've got to be really sensitive about the duration of trades now. You can't be doing trades that are going to take you into November, December. You're going to have to look at them and say, you can buy those trades, you can sell those premiums, but you've got to make sure that you're out of them pretty quickly. So your profit targets need to be smaller. You need to try and return to cash as quickly as possible. We did get a close under the weekly 21 on the IWM a couple of days ago, and then it bounced. And it was that bounce that sort of took me by surprise a little bit. I had some hedge positions on, thinking this is it, the walls are starting to crack, and it was like that little boy in Holland with his fingers in the dike. All of a sudden we have a close back above the 21 with the confirmation candle. That trade no longer makes any sense. You got to switch it. So one of the problems that you find is that you can sometimes, as a trader, become so connected to your bias. All right. One of the most important features of trading is being able to change your mind when the data starts to shift. If you are hell bent on saying the market can only go up, you will set yourself up for that one time when the market doesn't. And it's the same thing where you go, the market's too high, it's got to fall. Well, no, it doesn't. And it can carry on going up as long as, the market can maintain a degree of irrationality far longer than you and I can remain liquid, right? So we've got to be careful about getting so connected to these thoughts that we trade those opinions rather than the charts in front of us. Like that's the real secret, is not being stuck on a bias. I mean, I can remember a time when I was absolutely convinced this money printing was going to send gold to the moon. It was going to go to $5,000 an ounce. I'll never forget it. It was around 2007, 2008, after that crisis there. And, there was just money. The spigots were turned on and everything was just, it was just paper everywhere. And every single, anti-money printing theorist was out there saying that gold would go to $10,000 an ounce. And it didn't. And here we are, 10, 12 years later, still waiting for that event to happen. It's almost like you have a group of people that are apocalyptic. And I'll tell you, from my trading experience, calling a top is the hardest thing you can do. It is, calling a top is very, very difficult because the market can continue to grind higher, no matter what you think.
So for someone who is a little, I mean, so what would convince you to get bearish on the market in terms of getting a position that you were willing to hold through a little bit of
I think I look at the weekly 21 as a sort of line in the sand, right? So once a stock or an index closes below the weekly 21, cracks are starting to form. Now that doesn't mean that it can't go back up above the weekly 21, right? It's really important to remember that it's just closing below the weekly 21. It doesn't mean anything else other than it's below the weekly 21. So let's make sure that we put that there first. We can't read too much into it. It's the second close off, underneath the weekly 21 that starts to confirm that mentality, right? So once I've had the first close below the weekly 21, and I'll show you just how few are below or above the weekly 21. So if I open up my sort of market sort of screen. This is how I look at the market. This column here is above or below the weekly 21, right? There it is. If you look at the way in which I look at the market, we've only got the SPACs below the weekly 21. So we don't want to be in the SPACs. We don't want to be in the Russell, okay? We don't want to be in biotech on the equal balance biotech. There's a big difference between XBI and IBB. So be careful about which one you do. IBB tends to have a higher weighting in stocks like Moderna and things like that, where XBI doesn't. So this one's below the weekly 21. We've got the banking ETF is below the weekly 21. We've got corn below the weekly 21, soybeans below the weekly 21, and transports below the weekly 21. So those are the sectors I don't want to be near. Now, there is a theory. It's a theory, nothing else, that transports tend to lead the market. So they tend to be 6 to 7 months ahead of the market. So where transports is now, the rest of the market should be 6 months from now. I don't really buy into all of this, this is the historical precedent, therefore it has to continue. It's almost like saying that criminals can't be reformed. He stole sweets when he was 6. People grow up, right? So I don't really want to be looking at this going, well, things are going to be, all falling over the cliff in 6 months' time. I think what you've got to do is you've got to have a process that says, if we have confirmations of structural weakness and breakdown, that will convince me that things are going to be a little bit hair-raising, right? So what I look for exponential moving averages. I want to know whether they're pointing up or pointing down, because that will tell me the directional trend. It will tell me the path of least resistance. So for here, what I'm looking at is, where are the sectors that have got bullishly stacked exponential moving averages? So the price, the 8, the 13, the 21, the 34, 55, 89, all of those are positively stacked. We don't have one above the other. We have them in sequence. And I want to know that it's pointing from the bottom left of my chart to the top right of my chart. That's these signals here, okay? So I'm going to be aiming in the markets where we've got these greens. Then what I look for is it below the 8 SMA? So the short-term momentum of that trade, is it bullish or bearish? Is it moving up or moving down? If the price is below the 8, I'm not going to go trade it, because over the next couple of days, it needs to be above the 8 for it to have bullish momentum. So we start looking at these entry points. Is the 8 above the 21? I need to know. And if it is, I get a yes trade signal. Is the 21 above the 34? Yes trade. If the 34 is above the 55, right, that's this one over here, yes trade, right? So if I've got all my moving averages for the duration of the time that I'm looking to trade, together with the direction and the history of those exponential moving averages, and then on top of that, I have my squeezes that tell me what time frames I've got compression, I can build trades. So if we started to see a lot more red on the screen in terms of the EMAs, a lot more below, or below the weekly 21, and no trade, I'm out. I don't really care about the chart anymore. It's telling me in one sheet exactly what the state of the market is right now. So if you're looking to trade, these are the sectors you want to be in, or the ones that have got green. So finance, communication, healthcare, technology, real estate, utilities. Those would be the groups I would focus on first, as the sectors where there are opportunities. I certainly want to, don't want to be looking at peripheral trades. So one of the biggest challenges for people is isolating trades top down, right? They don't tend to go top down. What they tend to do is go bottom up. Everyone's keen to buy a 10-cent stock and go and trade it from 10 cents to 30 cents. That's every retail novice trader's dream, is to buy some penny stock and have it go, sky high. Dogecoin, or however you pronounce it. That kind of,
Chris, to the moon.
Yeah, to the moon, hold on for dear life kind of stuff. I don't do that sort of stuff. I prefer trading in companies I know are not going to go to zero. Like that's the first rule that I have. So, Google for me is a much easier trade. If we look at Google for me is a much easier trade to plan and to execute than, say, a trade in a small mom and pop shop, right? If you look at Google, pulls back to the 21. We have signals that are telling us prices moving up. We've got a squeeze firing to the upside. We've got our multi-term moving average oscillator telling us green, 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 green on everything. We know this is moving up. So what's the next deal? The next deal is Google to 2,900. That's the price point that I'm looking at over here. I'm looking to trade Google from where we are now to this white line. That's it. And then once it gets to the white line, we're going to take stock of where we are. We might get a pullback, and then we're going to trade it again up to the 3,000.
Which extension is that? Is that a Fibonacci extension?
Yeah, it's a Fibonacci extension. I don't know which one it is, but it's just, I have these automatically calculated into my chart. So I know the price levels at which I want to try and trade this towards, right? So once we get above this blue line, the next line for me is going to be the white. So we start saying, okay, 2.9 is our target. We go to our trade. We go to Google. You can see I've got some trades already on there. 2.9 is where I want to go. It's about $100 away. So by the 10th of September, okay, the market is saying Google, if it's a bullish signal, it's telling us that Google's going to be up around 2,900. So I'm going to trade a bull call debit spread for the next 17 days. This was relatively cheap. And I'm going to trade on the longer basis some put spreads to pay for that trade. All right, so now what we do is we go out a little bit further, 52, there we go, 15th of October. I have put spreads that are actually out of the money, and I've also got put spreads further on that are in the money, right? Let me see, there we go. So I've got some put spreads that are one strike in the money. So as Google starts moving up towards 2.9, which is what we are seeing from here, that's our price target. And we've got bullish indicators telling us that there's potential momentum moving us up. We've got all of our moving averages are positively stacked. We've got momentum in our favor. There's nothing on this chart telling me that Google's going to pull back to the 34 or the 21 at any point in the next couple of days. What I'm looking for is if Google can push up into that level now, all of my trades become profitable. I close all of them, and I then take stock again when it hits this level, potentially to trade Google up to the next red line, which is 3,180. So rather than trying to sort of buy and hope for the best, the plan is to trade it into these levels until it reaches those points. And then at some point it's going to pull back and we'll be out of those trades. Then we wait for the next one. You won't get comfortable trading like this unless you follow these stocks on a daily basis. So I look at this stock every day. It's on my watch list. I look at it every day together with Amazon. All right. So I think it's much easier to trade these stocks than it is to trade something that's got low liquidity. No one buys it. No one cares about it. These stocks people care about because they're big. They can move the market. So with Amazon, look what we had. We had that debacle with its earnings. I think Jeffrey and his friends were selling some shares as well, which also added to the sort of negative momentum. But look what happened. We had the drop down after earnings, bounce, and then a complete sell-off, right? We've now come down and tested these levels on our Fibonacci retracements. Do I think Amazon will get back here? Absolutely. How it's going to get back there, I don't know. I don't know how long it's going to take. But look what we're seeing. Signs of exhaustion already on the downward momentum. We are in a chronically oversold scenario. We've got very little momentum on the moving averages. But wouldn't you look at this and you'd say, you know what? I'm starting to get higher highs and higher lows. I'm starting to move up. All I need is a few more closes above these lines. I need to get closing above these lines. Potentially, once I close above 3,356, that's my price level that I'm looking for. This is going to start shifting to the upside. Once I close above 3,356, so that's my level on Amazon. I'm watching it. 3,356. That's what I want. Once it gets there, I think the momentum will start to shift, and then we can start playing it back to the upside to recapture this 3,773 level. And that's how you plan. You know, when you trade, you don't just run after stuff. Like I'm very against that. Every single trade that I try and do, I've been watching it for a few days. I let it percolate. I wait for it to hit the level that I'm looking for. Then I act. A lot of people don't do that. Professional traders will do it, but not your retail. Your average retail trader is not going to do that. And if you want to elevate your trading results, that's the kind of discipline that you need to do. I probably spend 90% of my time building the watch list to where I'm going to be trading, as opposed to the physical hitting of the keys. Like, that's the thing. Most retail traders are 90% hitting these alerts that are coming, these emails, text messages from their WhatsApp buddy from the gym. That's what they're doing 90% of the time. And they spend no time building the lists of the ponds at which you are going to fish. If I show you my watch list for this week, here's my watch list for the week. That's it. This is all I'm watching this week. So, we've got Google in here. Or we had Google in. Let me just put it back in. Google was in. That's it. I literally am just watching these. My trades for the week will come from here. That's, it's a much easier way to trade than trying to just throw, crap on. Like, I really am against that. It's, otherwise you run out of time. You can't manage all of that stuff.
So do you see I was just kind of curious if you've noticed, and I haven't made a watch list, I meant to, about the COVID stocks from last year.
Yeah, I have.
I'm wondering if the rise in COVID is how it's affecting some of these. Like, I meant to look at Zoom. And
so these were all the COVID stocks that did well. These were all the stocks that did well during COVID, right? And so you can see I've run out of data. I've got to try and fix this. But, effectively what's happening is it's these high beta stocks, right? If you look at the beta, these high beta stocks are the ones that get whacked, absolutely hammered whenever there's discussions around interest rates. So for me, I try and stay out of the sort of thematic stuff. If any of my stocks tend to be in here, it's coincidental. I personally don't like trading things like Zoom. I can't do it, because the thing is, it's too, what I'm trying to avoid is getting involved in any kind of, I don't know how to say it, but there's just too much euphoria about something, right? Like these meme stock stuff, like when I watch how those guys on Wall Street bets are, I watched one guy literally piddle away $100,000 the other day because he was convinced that this stock, Upstart, was going to drop on earnings. And great analysis that the guy did. He bought $100,000 of puts on Upstart, and he lost all of it.
Ouch.
Like, if you look at the signals that were underneath the trade before earnings, so look at where earnings are, okay, and if we draw this back, look at the squeeze. You see how the squeeze was starting to go red? There was absolutely no way that you could have, if you had any brain cells, buy put options at that point, because the squeeze was already telling you it was going to go long. So, you had all your moving averages stacked. You had massive amounts of volume going into the trade during the squeeze. How that guy threw $100,000 away on that trade is just beyond me. Like, that is just, and then I think he doubled down. At some point, he doubled down. He added more. And I've been following him on Wall Street Bets, because I tend to go in there and just read what these guys are doing. I don't know. I mean, you look at it and you go, a simple process of just looking at a squeeze indicator would have saved the guy $100,000. Like, what that guy did was no different from going into a casino and going, this roulette wheel is going to land on zero. That's what he was doing. That's what he was doing. And to me, that's not trading. That's gambling. And it's that kind of behavior that really ruins it for a lot of people. Because those stories, for some reason on Wall Street Bets, it's a bit of a sort of masochistic group. They take pleasure in the losses of others, right? It's like, everyone's taking, pleasure on everyone else's pain. I don't know. Is it sadists or masochists? I don't know. But anyway.
Sadists are the ones who take the pleasure in others' pain.
Yeah, they're all sadists. They're all sadists. Honestly, the worst thing that ever happened in the market is the invocation that, or the invocation that trading is easy, and that the only entry requirement is money. Like, honestly, they should have an IQ test. Like, if they really wanted to make trading proper, they should have an IQ test.
Well, I mean, if you think about the popularity of casinos and how much money they make, I mean, if you take someone with that mindset of the gambler and just give them the ability to trade, they're just able to gamble without going to the casino.
Yeah. Like, remember this as well. In trading, it's a zero-sum game, right? So that guy who went and, bought these put options, he basically lost to someone who took that money from him, right? This is the whole, the nature of the market, is that the money is going to flow from the stupid to the clever. That's it. It's just osmotic. That's how it is, right? So it's really in the best interest of anyone with no knowledge to get knowledge to even the score. That's the thing that you have to do. You have to even the odds. When you walk into the trading room, or when you walk onto the trading floor with your $100,000 or whatever it is, you're already at a disadvantage. You're already at a disadvantage because you are trading against people that have got far more money and far more information than you have, right? The only advantage you have when you're a retail trader is you have speed, all right? Because those guys with lots of money can't do what you can do. So you've got speed on your hands. I mean, you've got a big fund with hundreds of billions of dollars sitting in Apple stock. They can't sell that position tomorrow, right? They can't get out of that position tomorrow. So you've got your 10 shares, you can sell them and you're out, right? So you've got speed on your side, but money is not an advantage, all right? You have to have a process. So my ability to act on information that I'm getting, all right? This squeeze, this is not proprietary to me. This is available for free. Everyone has it. The problem is that most people aren't willing to take the time to learn how to read it.
So I have a question about the squeeze and earnings.
Yeah.
So with the squeeze and earnings, I know that earnings are kind of
it's a crapshoot.
A crapshoot, but what is have you looked at any sort of indicators as far as the squeeze going in? I mean, would you have gone long on that?
I was long on this one.
On the earnings, okay, you were?
Yeah, I was long on this one. The thing is, you have to look at the previous indicators, right? So let's look at this. We had a selling put spread signal, so we were at the bottom of the volatility range. Right. We've got signals there. We had previous price compression around the moving averages. So this, for me, together with a squeeze, I have an oversold buy signal. I have, I've got slight improvements forming here on my moving averages, right? But look what happened. My moving averages all of a sudden got stacked. And there's always, I'll tell you, one of the things is earnings is a crapshoot. Okay, I prefer not to trade earnings. All right, that's my preference. But when I have a setup where last time at earnings, look what happened. Bang, it shot up. This time on earnings, bang, it shot up. There's a track record of the stock tending to overperform at earnings, right? So I'm not doing my full analysis here, but I'm looking at this going, there's a historical tendency for the stock to rise at earnings, right? You can see it on the graph. If I've got compression, squeeze, oversold buy, lots of moving averages getting repaired, and I've got option volume coming in, why wouldn't I go long? You see, the thing is this, I'm willing to take the bet. I'm just not going to bet the house. I'm not going to bet the farm. I did a call butterfly on this trade. This was a call butterfly. I think we got maybe 400% on this trade. And then what we did was we replaced the trade the day after we had earnings. So we got the earnings pump. We replaced the trade over here, switched it to a debit spread using the profit from the call butterfly. And then we carried it over. I actually closed the final trade, I think a day ago on Monday, yesterday. So, the thing is, you can trade earnings or you don't have to trade earnings. I prefer not to. I don't like holding things like credit spreads into earnings. Sometimes those can be a complete mess. But sometimes trading earnings, the strategy to use is often call butterflies because they're cheap. And if you're risking 100% of the debit paid, okay, when you're not risking your whole mortgage, you're not putting down 100 grand on, a sort of black or white kind of answer, right? So I don't know. I think that many people have been emboldened by what they see others do, but yet the communication to the general public and the general masses around these losses and these stupid trades is never done. So everyone assumes that if you're part of that Wall Street bets crowd, you can only win, and that's not true. So, build a plan that's robust and that you test and that it works. That's far safer than following that garbage. Really, it's just garbage as far as I can tell.
Well, great information as always, Chris. We just got a few minutes before the bell, so we'll sign off here until next week.
Awesome, man. Good to see you. Take care. I love the
Absolutely.
lighting. The lighting is fantastic there.
I'm trying to get this beard out a little bit, we're getting early start on winter.
Well, I'll see you soon. I'll see you next Tuesday, Brian.
Yep. Take care, Chris.
Take care all. Bye.